This is how I help a client save over $250,000 in taxes after an IRS audit. My client holds over 100 Bitcoin, and the problem was not necessarily that he made a lot of money trading crypto. The problem was that he did not track the information and the transactions properly for many years, and the IRS took notice. In this video, I'm going to show you exactly how I help clients save over $250,000 in taxes after an IRS audit. An audit that began because the client did not have the proper tracking of the crypto transactions. Therefore, the reporting on Form 8949 was not correct, and how I built a more efficient tax position legally, safely going forward. Hi, my name is Delerme CPA, and I work with business owners, investors, and executives. And the way I work with them is I help them reduce their taxes so they can put money into their businesses, into their legacy, with their families, and actually spend more time and put resources into what's more important for them. My client is an early Bitcoin adopter. To this day, he holds over 100 Bitcoins. He's highly active in crypto markets. He's tracking trends, move assets across exchanges, and he positions capital in a strategic way. He's also an entrepreneur. He runs an agency that educates investors on crypto market, but also he owns a charter boat business and spends time doing the ocean skiing and family life. So my client, since he was that early Bitcoin adopter, he made a lot of money on the early years. So he took the crypto way from the beginning. But here's the thing, early on, there was no proper tracking of cost basis, no structured documentation of early Bitcoin and altcoin positions, no tax strategy aligned with any of the activities he was conducting. His prior tax professional did not understand crypto at a technical level, not understanding of wallet transfers, exchange-to-exchange movement, cold storage treatment, or proper cost basis for construction. Therefore, when filings were prepared, the crypto trades were incorrectly reported on Form 8949. And over time, that created inconsistencies across multiple tax years, which eventually triggered an IRS examination, which is not fun. And this examination expanded over 3 years. And the cost, the exposure, a few $100,000. Once the audit was concluded, the client came to us. And he came to us because he had a very negative experience working with a prior tax professional. We reviewed everything and immediately identify what the core issue was. This was not only an error in reporting, this was a foundational flaw on how records were kept in regards to the crypto transactions. So we had to take steps in order for us to actually help our clients. Helping our client is key, and getting the information and having the information is vital in order for me to understand exactly how is it that I'm going to help my client. And the first step was to get all the data available in order for us to do a full reconstruction of the events. So we requested copies of all the tax examination and results, all communication from tax agencies, tax returns for the last 3 years, complete crypto trade records, and early investment statements and documentation. Once we obtain this information, then we put the whole timeline together. Now, let me do a parenthesis. And this is where most people actually messed up. Investors, business people, as well as accountants. Tax work is not only filling out tax forms, as you guys see. You have to understand the whole backstory. You have to understand the time of events. You have to understand the timeline. You have to understand so much of the information in order for you to be able to proactively move forward with a tax strategy. In other words, it's a sequence reconstruction. Because if you don't understand actually what took place, then you're not able to fix it. And then therefore, you can prevent it from happening again in the future. From there, actually, we took a deeper approach. We understood the nature of the examination. Not only that, but we also got clarity on the methodology of the crypto trades and investments. We reviewed his business and personal tax returns and saw a number of areas of improvement. We established and confirmed that he's operating a business that invests and trades in crypto, as well as owns and operates other businesses. These 4 areas were critical for me and my team to understand, because as business advisors, you want to understand 2 things. Number 1, the nature of the business. And number 2, you want to understand the investment philosophy of the client. There's 2 things. You're running and operating a business is one mindset of an entrepreneur, but also with the profits, you need to understand what is the philosophy behind it. So then you can become a true advisor to the client. Once we understand how the business operates in reality, we have an understanding on how is the business structure, how is the business operating. We understand the investment philosophy. Then you can design a business and tax strategy around it, right? So you have the business mindset, you have the investment philosophy mindset, and then you have an overlay strategy that puts the 2 of them together. Once you have the strategy, then it can be implemented. And once you do that, then you can fix the problem. We put together the foundation of early Bitcoin holdings. That alone gave a lot of clarity to the clients. And the reason that it gave clarity to the client is because now he knows how much capital he started investing in Bitcoin with. So picture this, he's making a lot of money over the early years trading in crypto, right? Buying and selling, and or holding crypto for long term. But for many years, he had no idea what his initial basis, how much money he started investing in crypto with. So now we were able to have a foundation, a calculation of actually how much capital he started with. Now he knows how much his assets have gone up in value in reality, not guessing, but in reality. So that alone gave a lot of clarity to the client on actually how to keep moving forward with his investments. We also found out something very interesting, right? Oftentimes, crypto investors also operate businesses, or entrepreneurs operate one or multiple businesses. In this case, our client, since he was making money on the crypto market, he took some money from the crypto markets and actually started a charter boat business. Mind you, this individual, was living the life. He chartered a boat, had people over, and was conducting crypto business while he's in the Caribbean having fun on his boat, right? So the thing about it is that even though the charter boat business was not properly registered, we took the position where the business is operating de facto, which means even though it's not registered legally as a business with the agencies, it is operating, is providing a service, there's capital, there's money flowing, there's taxes being paid, etc. So once you have that operating as a business de facto, it gives you options in order for you to design and implement a tax strategy around it. And that's actually something that we did for that client. We then created a business for the client. The client had purchased a boat worth over $1 million. He contributed the asset into a properly structured operating entity. This matters because it creates tax bases inside the business structure. By contributing the asset into the business, then we are creating tax bases inside the business. And that changes everything, because in order for you to deduct business expenses and write-offs against revenue, you need to have what's called bases inside the business. If you don't do this properly, then you could be subject to AMT. And trust me, that is something you don't want. But in this case, since he's contributing a boat worth over $1 million into a business, he's got bases worth over $1 million inside this entity. Then we designed a plan around it. And now he's going to have, according to Section 162, ordinary and necessary business expenses for the charter business, Section 179 and other. Since the client invested a boat into the business worth over $1 million, now he has enough tax bases. And the beauty of it is the following. Section 162 allows you to have ordinary and necessary expenses to be deducted on your business tax returns. And now he has those because he has enough tax bases. Now he has write-offs and expenses that he can deduct on his business tax returns. Enough for tax planning. He can also use Section 179, which allows him to write off 100% of the asset for tax purposes, which is huge for tax planning purposes. But here's the beautiful thing. The strategy is not only running, but it's well positioned, it's well structured, and guess what? It's also defensible. After implementation, we helped the client actually save over $250,000, not only taxes, but also on interest and penalties. But more importantly, we gave the client something far more important than the immediate tax savings. We gave the client a clean, forward-looking legal strategy that's going to simplify his life going forward. Now he understands that he's got the ability to have tax savings in his investments and his business going forward. Now, instead of reacting to IRS issues, he operates proactively with a system built for scale. If you're an investor or a business owner that trades in crypto or has crypto holdings, and you would like to have a better tax strategy for your crypto investments tax-wise, be more than glad to give you a consultation. Give us a call, reach out. We'll be able to hear your story, understand your holdings, and we will be able to, if you qualify, design a strategy, a plan that's going to be tailored to you. My name is Victor Delerme. I'm a CPA, and I'll see you soon.